The bankruptcy of FTX has brought to light a large number of unethical business and investment practices, both within the company and outside of it. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. One of the biggest problems, which now seems funny, was that the company's founder and CEO, Sam Bankman-Fried, or SBF, as he is better known among the recently bankrupt crypto bros, got too much attention. Before it went bankrupt, the fact that he wore the same sneakers as their grandparents and drove a Toyota Corolla may have gotten more attention than the multi-billion-dollar business he ran. This was true for everyone from novice financial commentators to the world's largest venture capital firms. As the FX story develops, it's starting to look like this geeky persona was mostly just a carefully crafted image, and that Bankman-Fried would act erratic with outside investors on purpose to boost his image as some kind of misunderstood visionary genius. What was a big selling point for SBF is what companies should really avoid. Visionaries don't make good CEOs, and good CEOs shouldn't be visionaries either. It's easy to point fingers at a company like FTX that went bankrupt. But celebrity CEOs have become a real problem that could cost us a lot of money, even if we don't invest in their companies. Elon Musk is a visionary CEO whose personal image is inextricably linked to his company. It's hard to find a better example. Musk is obviously smart, and just mentioning a company or cryptocurrency can make its value skyrocket. But that's not something you want your CEO to be able to do. Investors in Musk businesses have mostly done well up to this point, but that is starting to change. The price of Tesla stock has dropped more than 50% from its high point, which means that many investors are still holding on to positions where they have lost money. Most experts agree that he has paid a lot more than he should have for Twitter, because he was afraid of going to prison for stock manipulation if he didn't. He used his large stake in Tesla as collateral for the loans he needed to close the $44 billion deal, which is now putting pressure on the electric car company, which had nothing to do with Twitter other than sharing the same name. People are more likely to support the ideas of a charismatic person than the ideas of a big company. This can be great for building buzz around a company, but then that company is tied to that person's decisions, for better or worse. People who have been told for decades that they are smart are more likely to make strange choices than boring, structured corporate management. The problem for investors is that by the time a CEO has built a public image of being a visionary, the stocks they represent are already overvalued, and any dumb decisions they make in the future will pose a huge downside risk to that position. If a business sells itself on having a visionary CEO, any investor in that business is putting their money behind a person as much as they are behind a business, and people are much less predictable and well regulated than businesses are. Investors in Musk companies have lost money because of this ongoing Twitter drama and some bad PR moves in the past, but he is a saint compared to a lot of other so-called visionary CEOs. Companies like FTX and Theranos, which are outright scams, and companies like WeWork, which are right on the edge, would not have been able to exist without charismatic leaders who distracted investors from the fact that their business doesn't make sense. Startup founders do sometimes need to be their own hype man to get early investors and customers, but there's a big difference between talking about what a business can bring to a market and talking about a personal vision for changing the world. Even if a business does not start with the intention of being dishonest, a manager will find it much easier to admit failure early on if their personal identity is not tied up to the success of their business. There's no way to know for sure, but Elizabeth Holmes probably didn't set out to start a vehicle for investment fraud. She started out to build a medical technology company. When her technology didn't work, the right thing to do would have been to admit the failure, and either shut down the company or try to raise more money to continue research and development. However, failures and setbacks are not what you would expect from a visionary CEO like Holmes, so she took a different approach. Long term, a boring company with boring managers will do much better than a boring company with boring managers who are also famous. It's not a coincidence that the number of visionary CEOs has grown so much in the last 20 years. Today, CEOs of large companies hire public relations consultants to improve how the media sees them. Corporate ladder climbing CEOs try not to get too much attention. Most of the time, they just want to make sure that a quick Google search of their name won't turn up anything that could hurt their chances of getting another 8-figure job. Company founders, however, often go a step further. People like Holmes, Newman, and Musk worked hard to give the impression that they were geniuses who were destined for success. Have all had articles written about the cheap cars they used to drive. This is all part of the public's effort to improve their image. PR consultants will give access to media outlets that are willing to write about these cars because it helps their image as a frugal, practical business owner who cares more about making the world a better place than about living in luxury. These same articles leave out details like the fact that Bezos has 2 private jets, a dozen homes across the country, and a very expensive toy rocket hobby. Zuckerberg owns a whole island in Hawaii. Buffett, the king of the humble persona, owns a private jet and mostly gets driven around in a fleet of Suburbans. This is a problem for business because it makes it hard to change direction away from the ideas that aren't working, because it can hurt the personal brand of the visionary CEO. If the company was led by a generic corporate suit, it would be much easier to change direction or get rid of them. The biggest problem with so-called visionary CEOs today is that they often hurt the day-to-day operations of the business and, ironically, can make the company less innovative. Why Visionary Leadership Fails is the name of a report by the Harvard Business Review. When they looked at 136 managers at different levels of the corporate hierarchy, they found that visionary managers often micromanage their staff, were too focused on irrelevant details, and stopped their peers and subordinates from freely sharing ideas. However, if visionaries are such bad business leaders, why are there so many of them? Well, the Harvard Business Review has a good answer to this question, as well as most people who see themselves as visionaries and want to be seen as such are more likely to start businesses and have the right personality to look for early stage capital. Pure sample bias means that if the more people in this group try to start a business, more of them will be successful enough to become household names, even if they have a lower chance of success at the start than a founder who just wants to build a solid business in an area where they see a good opportunity. Now we come to the final mistake that visionary CEOs make, which is that because their personal reputation is so heavily dependent on the success of their company, they find it impossible to scale back operations even when doing so would be in the best interest of their stakeholders. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.